Welcome back. You're watching Markets at Noon right here on ET. Now, we touched base on the Karnataka elections just before we got into break. Let's get back with corporate news and action taking place on that front. Vardhman Textiles delivered its Q4 numbers. Do remember that the numbers which had been delivered just about over the weekend, well, it was a bit of a mixed bag because we had the revenues which had declined, but the margins were higher at 17.3% versus 16.8%. So let's exactly understand what transpired for the company in the quarter gone by. Neeraj Jain, the joint MD of the company, now joins us on the show. Neeraj, Mr. Jain, good afternoon. Thanks for joining in. To start with, take us through the highlights of the quarter gone by, because your top line has been a bit disappointing, but on the operational front, you seem to have done well.
Q4, I think a little better in terms of the margins, because till third quarter we were using cotton which was at a very high cost, since the cotton was procured last year. So this quarter now the prices of cotton had come down, so there's some expansion of the margin. Two, on the sales price also there was a little improvement, so which further helped the margins to improve.
Is the capex cycle coming to an end? Do you expect revenue addition from here on with the additional capacity?
The capex cycle is likely to be completed I think by 31st March, most of it, 31st March 19, and I expect because our capex is close to about 1400 crore rupees, so I think on a net basis there should be a top line addition of close to about 800 crores or so on the top line.
Neeraj, the current share of fabric business is, how much is the current share, and by how much do you plan to increase it, and also what's the margins you enjoy in that segment?
The current share of the market on the top line is close to about 36-37%, and I think with the increase in capacity of fabric, it may increase to maybe about 40% or so.
What is the pricing trend in the yarn and cotton business? What's the impact of China in terms of long-term view for these prices?
You know, the last year India had a very difficult situation where we exported lots of cotton, and later on the country did not have enough cotton, so we had to import cotton at a much higher prices compared to the prices at which the cotton got exported. As a result, most of the spinners, they had to import cotton and they used it at very expensive rates, and the margins came down. This year, as of now, the cotton in terms of the US 10 cents is still comparable to the world markets. So to that extent, there has been a slight improvement in the margins.
Okay, how has currency depreciation aided revenues for you? Because we have seen the rupee plummet quite a bit. And when would these benefits essentially flow in on the financials?
The rupee depreciation started happening after 31st March. So yes, definitely it's a little support as of now. Definitely it's beneficial to the company, to the entire sector, and I think the rupee depreciation advantage would be available during the current period.
Leave us with the guidance for FY19. What are the key plans over there?
We generally don't share any or give any guidance in terms of the numbers. So our philosophy has been always margins of 18% to 22%. That's a band we have taken on a long-term basis for last 10 years. And we still maintain the sum. There can be an exception sometimes here and there, like this year has been an exception. But I still feel the band which we have declared 18 to 22% EBITDA in the long term, I think we'll like to maintain the same.
Okay, Mr. Jain, thanks so much for joining us and helping us understand what your quarter went by like. We'll wrap it up on this edition of Markets at Noon coming up.